Welcome. In this video, we're going to discuss the critical topic of IFTA taxes and how an IFTA tax audit conducted in any of the U.S. contiguous states or the 5 participating Canadian provinces could potentially put you out of business if your records are deemed unacceptable by the auditor. Now here's the kicker. It's the auditor who gets to decide whether your records meet the standard. In my experience, this often comes down to their personal interpretation of the record-keeping requirements. And believe me, my opinion on the auditor's opinion matters a lot. Did you know that approximately 90% of IFTA audits conducted by the Texas Comptroller's Office result in tax due? Yes, you heard that right. 90% of the time, you're going to owe additional IFTA tax after you've been audited. Now in Texas, we like to talk about bragging rights, but this is one area where the numbers speak for themselves. Take a look at the link to this video on my left. This file shows the results of the last 350 IFTA audits conducted by the Texas Comptroller's Office. Out of these 350 audits, 315 resulted in tax due. This isn't just hearsay. This information comes directly from the Texas Comptroller's Office through the Texas Open Records Act. You can see the company names, addresses, and other identifying details of these unfortunate entities. While I don't have access to the exact amounts owed, I can tell you that companies hit with a default audit were often assessed around $10,000 per truck in IFTA tax, not to mention an additional 8 to 12% in interest charges. Now let me point out that my firm has represented 90 IFTA tax audits. You can see the link to that on my right. These are actual clients. Many of them owed tax, but most ended up owing significantly less, just a few $1,000s. That's because their records were deemed acceptable by the auditor. When I say acceptable, I mean that if the IFTA auditor, whether from Texas or any other state, decides that your trip sheets, fuel receipts, and other documents meet the acceptable threshold, you might escape with just a minor tax bill. But if your records are 100% unacceptable, that same state auditor can issue what I call a default state tax IFTA audit, which could easily run you $10,000 per truck, plus additional interest. Just to give you a little background on myself, I received my accounting degree from Texas A&M University in 1989, and I worked for the Texas Comptroller for 16 years. In 2007, I founded Texas Tax Group, a firm specializing in defending Texas Comptroller audits. One of the taxes we often defend is the IFTA tax. To date, we've defended over 100 IFTA tax audits conducted by the Texas Comptroller's Office. If you're watching this video, I don't need to explain what IFTA is all about. If you own or operate 1 or more trucks in 2 or more of the lower 48 states or select Canadian provinces, you already know the stakes. IFTA, or the International Fuel Tax Agreement, is an agreement among U.S. states and Canadian provinces that simplifies the reporting of fuel use taxes by interstate motor carriers operating in 2 or more member states or provinces. So, what's the takeaway here? Simply put, maintaining acceptable records is crucial. It can be the difference between a minor tax bill and a devastating financial hit. If you're not sure whether your records meet the acceptable threshold, it might be time to consult a professional who can help you navigate these waters. To make things easier for you, we're offering a free consultation to help you assess the state of your IFTA records and prepare for any potential audits. Don't wait until it's too late. Schedule your free consultation today. Just click the link below and let's ensure that your business is protected from unexpected tax liabilities.